2 plus 2 equals 4. What happens when a liquidity sweep is taking place is there's no logic behind what's going on. So what really is taking place is banks and institutions are staying out of the markets. They're waiting for the liquidity sweep to be over. So, the massive candles and the market going in the opposite direction, or it climbing like crazy. When those massive candles are taking place, banks are sitting out, they're watching it, and they're just seeing what retail traders do. They're seeing what the market does next. Now, for retail traders, the people that are like beginner or intermediate, they're looking at these massive candles like that one there. Do you see that green one?
Yeah, right here.
Yeah. So if you look halfway through that candle, a lot of people would have been selling, like halfway through the wick, like down to 2,000, even 2,210. People would have been selling like crazy there, thinking, yeah, perfect. Oh, it's come to a perfect point. I'm selling here. And then look at that massive wick. It shot up to 2,242.
2243 from 2210. You know, if you guys aren't up on, that's a huge jump in, and this is a 5-minute candle. So that means what a 5-minute candle means, and we'll come back and do disclaimers and all that stuff because we do have to do that. Again, if you're just tuning in, a lot of people were messed up because of the new code on the Zoom was real. But what Javid and I are talking about is what's been going on the last few days in the market. And a lot of people have been texting me, especially people that are new to the trading conversation, and they're, look, my stop loss just got activated. So I think I'm going to sit out a little bit here until this calms down. But a lot of people are wondering, how come there hasn't been more trades? And I've tried to explain that you don't want to force it. And sometimes it's not there. Like, I mean, yesterday I was able to go in and make a bunch of little small trades, but I'm nervous right now about these massive swings. And that's what we're just talking about, because all your conventional wisdom goes out the window. And now it's just like kind of a guessing game. And like, this is a 5-minute candle. So that means that right here where my cursor is, that's where this 5-minute clock started. And then if the market is going up, then you'll see this candle turning green. And then let's say it stopped right here and the 5 minutes was up. And then this was a new 5 minutes. And sometimes you'll see it turn green and then red and then green and then red. But a red candle means that from this point here to this point here, 5 minutes elapsed. So in that 5 minutes, the gold market went from 2210.09 to 2204.85. And then here is a new 5-minute candle. Now, during the 5 minutes, you might see it going up and down, but it started at 2004 and then it went up to 2007. So it went up three ticks, right? And so here, look, check this candle out. This is the one he was pointing at. Started at 2193. During that 5 minutes, see when it gets thin like this? That means it shot up all the way to 2243.54, but it didn't stay at that high length for long. So when it's real thin like that, that means it just went like, you ever see it just go real fast? It goes zip, and then it comes back down. But when it does that, not to say that it is or isn't manipulated. Some people think it is manipulated. Some people say it's just natural. I personally think it's manipulated. But when it does something like that, what most people, Javid is saying, is that most people are thinking, oh, it hit here. And if you remember the training that they talked about where you're looking for patterns, like the ball hits the bottom and it hits the top. So if you look at, like, if I was looking at here, I might say like this is like, they call it a trend line, right? Like if I'm let's see here, right? So if I do this, like kind of here, oops. So see how it's like, yeah, that's already boxed in, like this in here. But here, it didn't do what it was supposed to do, and it went straight up. And I would say hundreds of thousands, if not millions of dollars were lost by retail traders because they were thinking it's a sell. The signals that we see in our back office on Akashx are probably saying sell. And it's not to say that it's never going to be right. Nothing's right 100% of the time. Bots would see an algorithm and that it would just be based off a pattern. So a bot would think sell, right? Most traders would think sell, but yet the market went completely spiked up, and that essentially what he's saying is a lot of retail traders get hurt because now they're obviously not able to just guess. That would be gambling. And most traders aren't guessing, even though they're not right all the time. They're using strategies to come up with, why am I making this trade right now? Why do I feel confident in this trade? It doesn't mean that it's always going to go that way, but they have a strategy. This goes against all strategies. So that happened when? Yesterday? That happened on Wednesday.
Yeah, so the market has been doing that for this week, basically. We had news that came out, FOMC. That was a fundamental reason as to what made the market go haywire this week, like actually start going crazy. Now, for myself, like based on what I'm seeing on the charts, as I'm analyzing the charts myself, I can see the market's into a nice area of liquidity, a supply area. Okay, so Glenn, if you can see, it's reached.
Here, let me. I'm gonna. Can you? Share your screen, or do you want me to do
it?
Yeah,
for sure. I can share my screen.
All right, go ahead.
Okay,
and just while he's doing that, just real quick, because we got a weird start to this morning. I changed the password on my Zoom from strategy to real. Obviously, you guys that are here figured that out. I am recording, so we'll put the recording up. We kind of just got into it. Javid was already on the call. And so instead of normally where I might go through some stuff to begin with, since we have Javid on the call, we're just kind of going through some of what might have happened over the course of the last few days, which I feel like is extremely valuable to people that are on the outskirts, that are looking at Akashx as, do I want to get involved in this community, or the people that are in trying to figure out what happened over the course of the week. But as a disclaimer, this is for educational purposes. Nobody is telling you to invest, not to invest. We are essentially just providing some backstory, some information, and education as to why certain things are happening the way that they are. So do your own due diligence, take responsibility for your own investments. I am not an employee of Akashx, so I am a member, just like you guys are a member. And we have experts that are much more educated on market and market analysis, like Javid, who was able to come onto the call and able to give us some insights. But again, just because he is a part of Akashx, he cannot tell you to trade or not trade. If you decide to make a trade based off information that you see, you have to take responsibility for that trade, which means you're taking responsibility for your own actions. And if you glean some insights based on information provided by an expert, great, but you can't hold the expert accountable for things that are outside of their control. They're only giving us information that they might see. Is that a good disclaimer for you, Javid? I don't know what your normal disclaimer would be, but does that cover some of the bases?
Yeah, for sure. My disclaimer is to have everybody feeling comfortable. My disclaimer that's compliant as well in the industry. I go by the sense of course, trading consists of substantial risk. You guys should never risk money you can't afford to lose. Trading losses may not exceed the balance. However, we always suggest using strict money management when it comes to trading anything. And of course, we want to profit more than we lose. We do not want to be part of the 95% of retail traders that lose money on the markets. We want to be part of that prestigious 5%, that group of people that be profiting on the markets. And during these live trading sessions and educational sessions, we strive to be part of that 5%. Does that make sense, ladies and gents? So right now I'm in for a sell on gold. As you guys can see, I called a sell. The entry point was 2175.1. We had a few opportunities to get into that. It climbed up to 2175.4. On my screen here, my liquidity provider is Oanda, so there may be slight differences in your price. However, you would have still been able to catch this average price, which is 2175.1. So currently the price is at 2174.9, so we are in a little bit of profit. And I've set the parameters here that keeps us rather safe. 2173 being the take profit, and I've set an SL of 2178 for this trade. And I was literally just about watching the trade. So as you guys can see, I have an area of liquidity here. Let me draw it out for you. Okay, I like starting from a blank canvas. I like drawing on my chart. So can you guys see this area over here? Yeah. You guys have a look over here. I'm going to draw a line here to make things clear for you guys. So this area here works as like a little ceiling, okay? It's a little ceiling. And you can see we have another ceiling over here. We actually have another area, overall area ceiling over here. And another one right here. You can see there's some strong resistance in this zone over here. Some resistance in this zone over here. Minor resistance in this zone over here. However, taking that into consideration, it's like a staircase method. We've sold in this area and we want to take profit into 173, which if you follow my cursor is down here, which is a realistic area to be wanting to catch if the market is going to be dropping down there, right? To 173. Now, worst case scenario, let's say what happens is the market breaks out. It continues climbing past our SL. Our SL is 2178. 2178 is over here, if you follow my cursor. The next area or point of interest where we'd like to sell is up here. It's 284 area, okay? The reason why I'm looking for sells right now, this is if you look at it through that perspective of sells. Now, I'm going to draw some different lines for you guys based on buys, okay? If you were to be buying gold. And I'm going to make them a different color. Let's make them green. So if I was to just be looking at buys only, follow my green lines over here. This is an area or point of interest that I'd like to buy. This is all based off a basic form of analysis, support and resistance. Okay, let me just quickly check if we've got any news coming up. Give me 1 second. So the date is the 22nd today. Okay, so no massive news, no major news. Okay, so we're good. Okay, so today is basically all technical analysis. No news that's going to come and make everything go haywire. It's all based on what we see on the charts, okay? So, as you guys can see, I drew a zone here where I'd like to buy from. This is a buying area. Now, let me give you guys another zone. This can also be a buying zone. where I said is a selling zone, is also can be a buying zone. But when does it become a buying zone? This becomes a buying zone when the market breaks out from it, when it climbs above it. Once it breaks through this area, and then when it comes back down, it's considered a buying zone. But currently, because it hasn't broken out from that area, it's still a selling zone. And as you guys can see, it's respecting it at the moment, right? Based on what we can see, is respecting this selling zone. It's touched the selling zone, it's touched that area, and now it's dropped down. It's currently at 2174.3, which is not too bad. We're just 10 pips in profit. Can't complain. And it's respecting it. So what I'm going to do is let it run. Now, another area of buys is, as you can see over here, 2182.1. That's another area or point of interest where we'd like to buy from. When would we be buying there? Same as the last example. Once it breaks above this area, this green line over here, that is a area we can buy from once we see a little pullback. When you guys see me or another trader trading live, we always say, oh, I'm waiting for a pullback. That's what I'm waiting for. I'm waiting for it to drop back into the buyer's zone. Does that make sense, ladies and gents? So this is a perfect example right now in front of us of it respecting our zone, our supply zone. It's respected this area, it's hit it, and it's hit it again, and it's respecting it currently. So what we're doing is just waiting for it to drop by 10 more pips, okay? Not much. Actually, it went down to 2173.8, so 8 more pips even. So now that we know it's respecting it right now, we're just going to be holding the trade. What a lot of individuals would do, let's say conservative traders, like traders that don't like taking too much risk and they're comfortable and happy once they're in profit, what they do is, you see their stop loss when it's set to 2178. As you guys can see here, what they would do is when it dropped down to 2174, they would move their stop loss into profit. They would have moved it to 2174.5. So then you're already out of the trade. However, what's happened is you're already out of the trade by in a smaller amount of profit. But what you did was reduce your exposure. You reduce your exposure, how much you're risking, and so on. Does that make sense, ladies and gentlemen? So you're keeping your trades very conservative. As soon as your trade's gone into profit, you've moved your stop loss into a small profitable position. You wouldn't be making as much if you held the trade all the way to your take profit. However, at least you're in a risk-free trade in a sense. Because some conservative traders like just being in a risk-free trade. As soon as the market goes into profit, as soon as it goes into the direction that they're comfortable with, what they do is they move their stop loss. So regardless, whatever happens to the market, they're in a risk-free trade because it back into the opposite direction. They're taken out of the trade in profit. Does that make sense? So, yeah, so now it's literally just a waiting game. We're in for the trade. We've got 4 minutes left of this 15-minute candle. We're currently still in a little bit of profit. It's at 2174.7 right now. But it is nice to see that it is respecting this zone here. So what we want to happen now is the same thing that happened here. It respected it and dropped. So we'd like to see it respect it and drop. And we don't need it to drop by much. We just need it down to 2173, which isn't far. If you guys follow my cursor, you can see it was close to that. So not too far away right now.
And so you guys know, number one of the biggest...
I can't hear you, Glenn.
I think
you're muted.
You're right. Thank you. I just wanted to jump in on a couple things because there are just an interesting group of people on the call. Some people are kind of new. Some people have been tracking the conversations. And I want you to know a couple things about Akashx. So what's attractive about Akashx is it can serve you at any level that you are at. Meaning, if you are a beginner and all of this is like way too technical for you, then that's okay. That's what Javid and some of the other traders are there for. They give us trade recommendations. They call them alerts, where they'll tell us all of these little numbers to put in. So you just have to kind of learn how to do it. Or they even have something new technology called tap to trade, where they'll put all of this info into a trade, send it to you, and you just hit OK. Now, that's to start. Then, as you start to become more comfortable and more confident, which we recommend you starting on a demo account, then you start to move into real money or maybe a competition, which we'll talk about today, where you are now in the game. It's for real. But you don't start there. You start with a demo account. You start by practicing. You start by jumping on and learning. And I've been in a lot of different trading groups and different platforms. This is the first group that I've ever been in where you have real traders that are jumping on multiple times over the course of the day, and they're teaching and showing what trades they're in and letting you know why they're doing what they're doing, which then gives us the ability to start to learn by osmosis, right? We're not even maybe signed up to learn. We're just trying to practice. But then when you hear it enough, you start saying, oh, I understand what that means. If you're practicing and putting in your own trades, like we recommend you do, then you start learning, oh, okay, this is what a stop loss is. It's not that big of a deal. It just means that when the market exceeds this area, it'll automatically bow me out of that trade. I'll take a little bit of a loss, but maybe it saves me from taking a much bigger loss. What's a take profit? TP. All that means is when it hits this point, it's going to get me out of that trade in profit. Now, it might go further, but it might retract back. So you're picking that point, right? Well, how would I know where to pick? I don't. But if I have traders that are giving me advice, or maybe not giving me advice, just giving me insight as to what they're doing, then it gives me a little bit more confidence to stay in a trade longer. Or maybe like Javid's saying, you might see yourself get into profit, and now you can say, I'm going to just get out of that trade early because I'm already in profit. So anyway, just keep in mind, if this is too much for you, don't be overwhelmed. Just use the basic tools, start where you are. And if this is, if you've been now in this, you should be respecting and starting to hear some of these terms over and over again. Some of them will start making more sense. So this, again, is just a little bit for everybody so that you guys all, if you don't understand what Javid's saying, all you have to say is, hey, this is why this guy's here. I'm just going to accept that he knows. I'm going to take their advice for now until I learn a little bit better. I personally love this stuff. I love geeking out over it. So I really appreciate Javid coming in and showing us what's going on. So where are we at right now? What are we down to? 2173 and a little, it's dropping.
Yeah, so as you guys can see, it's literally respecting our analysis right now. And like I mentioned, I'm here to hold you guys' hand virtually, of course, throughout your trading journey, throughout your trading experience. I've been trading in the markets actually for the last, since 2016, okay? I've been getting a lot of a personal experience, and actually what I'd like to do with Glenn very soon is do a call and break down a background in regards to what got me into trading and also who you're learning from, because I know people feel very comfortable to who they're going to be getting trade ideas from, who they're getting education from, and so on. Like, I'll give you an example. So one of my friends, he went to get laser eye surgery for his eyes because he didn't want to wear glasses anymore. He got a complete breakdown of the doctor who will be doing his surgery, carrying out the surgery to do with his eyes. Because, of course, your eyes are such a very important component to your life, right? To your, oh, there we go. We just hit take profit, guys, on our trade, by the way. Everybody that entered that trade, you would have made some lovely profit. That is our trade closed. It has passed hour take profit. 2173 is currently at 2172.8. So as I was saying before, I was interrupted by the market. So my friend that's going for the laser eye surgery for his eyes, he got a complete breakdown of the background, the qualifications, who are the people that are going to be carrying out the procedure on his eyes. And that, of course, made him very comfortable to see, okay, this individual, this is their background, this is their history, this is what they've accomplished, and so on. I'm pretty sure you would want the same thing when it comes to something as important as your eyes, right? Well, what about your money? Your money is also very important to you as well, right? Your finances, your money management, your, in a sense, your future, the money that you're going to be leaving behind for your future generations, the money that you're going to be earning or making throughout the rest of your life from here on out. I'm pretty sure you would want to also know who is behind the education, the trade ideas, the analysis, the breakdowns as to this potential opportunity that could even change your life or add an additional source of income for you. So what I'm going to be doing is having a call with Glenn in the near future. We're going to be arranging that where I also give a breakdown in regards to who you guys are learning from or who you guys are getting trades from, a complete breakdown. So people get an understanding of what caliber they're also dealing with when it comes to getting into the markets, and also to help you feel comfortable as well. Because I'm pretty sure you would want to be taking advice or following the steps from someone that has already accomplished a goal that you maybe want to accomplish as well, or somebody that is following a path that you want to follow as well, or leading in a path. So I look forward to doing that with you all as well. So yeah, just to confirm that gold trade that we got into, lovely profit there. You see that trade there, Glenn?
I did. I got in a little bit late because I was watching you and I was doing it. So anybody who goes and watches the recording, they'll see that I got in a little bit after you started talking. So I didn't quite catch as much of the profit, but I did catch some profit. I got maybe about half of what it is that you got. And then when I saw where your take profit, mine was a little lower, and it kind of went right to where you were. So I kind of got out of mine just because we're on here, and I didn't, I'm trying to follow what you're doing. So this is it's a great practice. Right now, I'm in a competition, so I'm very it's funny when you get into a competition how much more cautious you get. So it's interesting where it all feels real. So all these little things that I was doing before where I didn't care, now I'm like, oh no, I care now. It's different.
Yeah, makes sense.
Yeah.
That definitely makes sense. Yeah. Yeah, that's
No, that was awesome. So right now, what are we at right now? We're at 2174, right? Now here's the other thing too. There's a lot of different currencies to trade. One of the recommendations that I got when I first started getting into this, because I know crypto, like a lot of people know me as crypto, but it's like there's crypto, which could be Bitcoin, Ethereum, or Doge, or Litecoin, or Bitcoin Cash. Like there's a lot of different, XRP. There's so many different versions of crypto. And then you have gold, or commodities like gold and silver. They specifically have us targeted more on gold. And then you have other indices like the US 30, or which is the United States Dow Jones Top 30, or the NY 100, which would be the New York Stock Exchange, which is a blend of 100 different companies. So you see, that may be tied to the opening belt in New York, or the Dow Jones may be tied to the opening belt in New York, whereas gold kind of runs 24 hours. So they're all like a little different, and it's like kind of getting used to the currencies. I personally liked the advice of stick with gold, and because I was kind of all over the place, but then your lot sizes which is essentially how much you're forecasting into that trade. That changes. The way you would program in the trade, like how many pips up or down, that all changes. So everything kind of changes when you change over to a different currency. So I was told by a few of the traders, look, just stick with gold for now, and then start maybe experimenting with some of the other ones when you get some practice under your belt and you start to understand what some of these terms are. I can tell you, and I'm talking from, I've had bots, I've done some trading just enough to know a little bit. Over the last 3 weeks, I've learned more in 3 weeks than I have, I would say, in 6 or 7 years of dabbling. And it's given me so much more confidence to be able to go in, open a trade, know when to close it. And I'm far from experienced, but I have now some practice time under my belt. And I'm telling you that because every single person that's on this call, whether you're brand new and today's the first time you're hearing about this, or it's been a couple of weeks, there you can accomplish whatever you want to accomplish by using this suite of tools. And that's what this is. It's a suite of tools. Having the trader come on is just almost like a cherry on top, where now we have somebody that has experience who's giving us a little bit more customized information as compared to jumping onto a live call, which we would see maybe a lot of the same stuff, but it would be a broader scope for everybody where, maybe we can't ask as many questions or whatever. So anyway, this is awesome. So what are you seeing right now? We're at 2174. Are you kind of holding tight for now?
Perfect. So now that our trades hit take profit, we're out of the trade. Now, like I said, this is a zone that it has been respecting. So essentially what I'm seeing is based on where the market is right now, or two potential avenues. Okay, so I'm going to delete this bit. Two potential avenues. So let me just get a eclipse. There we go. So this area has been respecting. We know that, right? And our trade that we just got into confirmed that. So if the market was to climb back into our entry point, we do it all over again. You don't change a winning formula, right? So when it comes back to this area, we go in for our same trade again. I would go in for the sell trade again, same take profit.
And what's that number? Is that 2174? 2175?
So we got in at 2175.1, but if you look closely, actually at the time, it also did a little pullback. It did climb up. It went to 2175.6. So 2175.6 is a comfortable area. We want to go in for a sell again. Okay. Now, again, so it respected that. Now, the other potential avenue is it continues dropping. Now, if it continues dropping, that's completely fine. Remember, I said there's also a buyer's zone here. Yeah, right here. So I would want to buy over here. Now, you're probably thinking, okay, Javid, if it does continue going down, and if we know we're going to buy here, why don't we just sell anywhere here? Why don't we sell in between? Well, that's because you're leaving too much area for it to climb back up to. You're leaving too much exposure area where the market can do a pullback and climb up and very likely hit your stop loss. Because if you look at the markets, it doesn't just go up in one straight direction like an escalator. No, it works like a staircase. It works up and down, up and down, up and down when it's going in a certain direction. So if we know, yes, it will drop down to buy over here, in between, it could do a little drop, it could pull up, and then drop again, and then pull up, and then drop properly. So if we know that, there's no point of us risking our capital and leaving too much exposure for us to be losing a trade, because that's how you blow your account. You can have a great strategy, or you can have a very good idea of where the market's going to go. But if you're just getting in at bad entry points, you're very likely to be risking your investment amount. So as you guys can see, it's back up to our area almost. I'm looking for it to climb a little bit more. It's at 2175.5 right now, and we go in for a sell. So it's at 2175.8. So let me just write that down for us. 2175.8.
Now, do you kind of wait to see, because it did spike all the way up to 2178 last time. So it did kind of, but it was one of those like really thin, it just went pop and then came back down right to that 2175 area, which is where it's sitting at right now, 2175.42. But it's moving a lot also. So it's kind of got like that little up and down like movement where you kind of don't know whether it's just going to go shooting down or up.
Yeah. So that's based on the volume in the market. As you guys can see, there's a bit of volume in the market. Now, if you had already entered when it went to 175.8, as you can see, it's already dropping down. It's already at 2174.8. It's already dropped down by 10 pips, so it's literally respecting our analysis. It's literally going with the flow of what we want. I'm not setting a massive take profit because I can see it is up and down right now, and that's completely fine. What we're doing right now, the trading that we're doing right now, is actually called scalping. Okay, we're scalping the markets right now. So we're taking small little clips out of the market to end up into profit. So our entry point 2175.8, as you guys saw, as soon as I said yep, now is a good time, you can see we're in lovely profit right now. It's at 2174.3, and it's not far from our take profit. I'm taking small little scalps, but 2 scalps are equivalent to one big good trade. You know what I mean? So the trade that we did earlier, plus if this trade was to drop down to our take profit right now, that would be two good trades molded together to make one very good trade. Does that make sense? And so far, literally respecting our analysis, all we need for it to do is literally just wait for it to drop down to our predicted zones. Okay, so our take profit 2173.8. That's literally what we're waiting to see now, 2173.8. And hopefully we should see that in the next new candle that's going to open up in the next 20 seconds now for gold. Okay, so it's literally just a waiting game now. We've entered our trade, put in our parameters, and now we just sit back. Literally nothing else we can do. We can't force the market down. I can blow on my screen as much as I want to. Unfortunately, that won't make a difference. So now that we're in for our trade, let's see how our next 15-minute candle goes. But as you can see, literally it's been respecting that ceiling, right? It's like a ceiling. If you throw a tennis ball at the ceiling, you're expecting it to bounce down, and so far that's what it has been doing. Not massive movements, but that's completely fine. We're just clipping the market right now. We're clipping these small trades at the moment.
Somebody asked, what are pips? I know
So
I'm not really that great at explaining that, but can you explain that to the group?
Yeah, so PIPS stands for, it's an acronym for price in points, okay? So you know how we have a form of measurement for everything. Height could be in centimeters, it could be in inches, it could be in foot. Currencies, you measure different currencies differently, right? Like for the UK, we have GBP. For the United States of America, you have USD. When it comes to trading, we measure in pips, price in points. So for example, you can see right now gold is at 2174.6. Okay. Okay, 2175.3. The price is always going to change, yeah. But let's say, for example, the price of gold right now is 2175, example. And if the price of gold drops down to 2174, that means the price of gold has dropped down by 10 pips. So different currencies have different forms of measurement, okay? You can measure different currencies differently. So you can see GBP CAD. This is Great British Pound and Canadian dollar. So this chart right now in front of me is showing me how many Canadian dollar I get per GBP. So for 1 GBP, I get 1.71205203 Canadian dollar. So when it comes to currency pairs, you're always measuring how much you get of the currency compared to the first currency in the order. So for example, NZD USD means how much US dollar you're getting per New Zealand dollar. USD JPY means how much Japanese yen you're getting per US dollar. So you get 151.60 Japanese yen per US dollar. So if Japanese yen had dropped down or climbed up, the pips is the difference in the price in points, the exchange rate. So we can see the exchange rate right now. So XAU USD, which is gold against the US dollar. So 1 ounce of gold against the US dollar. Currently, the exchange rate is 2175.3. So that's what PIPS is. And you can get a much better breakdown of what PIPS is on our educational platform, on the Akashx platform. Actually, we have a basics academy where you guys can go through stuff like terminologies and what does PIPS mean and what is leverage and what is stop loss, what is take profit, and so on. Does that make sense, guys?
Yeah, and it's interesting when you get into this space. The terms they're not as complicated as it seems. Like you hear EP. Well, what is EP? You see it right on Javid's screens, entry point. That's where you're coming in, or that's the recommended spot that you would potentially come into the market. That's your entry point. Your TP, that's where take profit. That's where you're going to get out of the trade, hopefully in profit. SL is stop loss. So what these things mean is when you're entering a trade, if you're going to do it manually, when you hear the terms bot, all a bot is doing is it's using trading algorithms over time. So that's taking the history, different trading strategies, and it's reading the market analysis, which really has come from humans, or humans and tracking system, and it's using artificial intelligence to find all these spots. They're called algorithms, right? Like patterns of where the market would maybe potentially go. There's no bot yet that I'm aware of that's 100%. There's no human that's going to be 100% because the market is unpredictable. So all you're doing when you enter a trade manually or you accept a tap to trade, and this is why I think it's important to be involved with calls like this where you're hearing these terms, is what are you actually agreeing to when you accept a tap to trade? You're agreeing to an entry point, a take profit, and a stop loss. Well, if you know how to do it manually, now you can agree to the tap to trade, look at the chart. You can manually decide, hey, do I want to get out of this early, take the profit and run? Or there's so many things that you might want to look at deeper as compared to just saying, press a button, walk away, and not pay attention to what it is that you're doing. There are some times where I'll take a tap to trade, then I'll go in, I'll look at the scanners, I'll look at what's happening in the market. I may double down on that trade or even triple down on that trade because now I have other things that are giving me comfort, not just the trader, but I see other things that are making me more comfortable. And I'm saying, yeah, this is going to be a good trade. I want to go in heavier on this trade, right? So there's just so many things you can pick up by just knowing these little terms, which aren't really that complicated. Take profit, entry point, stop loss. Those are like really your three main. Then you need lot size and pips, and just to kind of more understand how much you would lose if the trade didn't go the way you thought, or how much you would potentially earn if the trade does go the way that you hope that it would go.
Yeah, exactly. So right now we have a pretty calm session. If for those that would tune into our previous sessions, you might be aware that maybe they were more fast paced. They were maybe much more energetic. The markets has its moods. Every day the markets is very different, and you need to be aware of how to approach the markets. And actually, that comes with experience, as you guys can tell, comparing to maybe how I approached the previous session with you guys. Maybe I was more electric when analyzing the charts. Maybe I was more energetic and fast paced when I was analyzing the charts. That's because I had to keep up with the charts. And right now in front of us, I'm pretty sure people that have tuned into previous sessions, you would be aware that it's actually pretty slow paced right now. It's actually not moving as much compared to previous sessions and so on. And I'll give you a logical explanation as to why. And when it comes to trading, you got to be able to decipher these things. You got to be quite logical as well. So the markets, I treat it as if it's like a entity, an actual being, living, breathing, you know. I treat the charts as if it's breathing, like up, down, up, down. And as you can see, it's breathing very slowly. Why might that be the case? Because I feel like in the last couple of days, the market went to the gym. The market went to the gym. If you guys can see, look at that. That market did massive movements. We're all the way here. We're on this little speck over here, waiting for a little drop. Currently, we're in profit, which is very nice, but we're waiting for a little drop. But if you guys have a look, the market went to the gym. It was working out. And now it's tired. Is actually tired. Is in its resting phase right now. It's actually worn out from all the movements that it was doing in the last couple of days this week. Now you can see the markets have slowed down. This is a time where we usually trade. You would see me and Brent going crazy trading, me and the educators getting very active, sending lots of trades. The reason as to why we're not is because we can see there's not a lot of movement on the market. That's why we're going in for these low risk quick scalps or short-term scalps, these little movements. So like we're in 10 pips right now, not much, but that is the most we can grab right now because it's not climbing up by 30 pips and then 30 pips and then 50 pips and so on. It's moving small amounts, small increments, and we're just trying to take advantage. We're scalping, we're scraping off these little amounts of profit off of the market. So that explains why it's a slow moving market, and that also explains our slow moving approach. If we're trying to catch big movements right now, we'll be stuck in a trade. We'd actually be stuck in something called consolidation. Because if you think about it, these are 15-minute candles. In the last 15, 30, 45, 1 hour, it has been in the same area. It has been in the same zone over here. So I personally, what I'm most likely going to do now that it's done it twice in the last 15 minutes, is drop down by 10 pips, or just over 10 pips, which is much profit, but that's the most profit I can take out of gold right now because it's not going anywhere right now. It's not climbing up or it's not dropping down overall. So I might as well take what I have, might as well take the profit that I can. So I entered at 2175.8, so I'm going to close at 2174.8. If you entered at 2175.6, close at 2174.6. If you entered at 217, I think, close at 2174.7. So now it's dropped down to 2174.6. That's 10 pips in the bag. Let's exit that trade, ladies and gents. Let's close that profit. And that now means in the last 2 trades, we made 30 pips. And 30 pips is usually what we catch in one trade when the market is moving quite a good, decent amount. So as you can see, it's at 2174.4. It's in a good amount of profit, ladies and gents. Let's bank that profit. 2174.3. Let's close it. So if you're in the trade right now, ladies and gentlemen, I can definitely do recommend closing out the trade. So then you're not stuck in a trade that's not moving. It's like being stuck in traffic. It gets very jarring when you could have taken the expressway, or you could have taken a different route, or you could have just stayed, sat back and waited for the traffic to be gone and then made your journey. It's very frustrating and jarring, right? So that's the same thing over here. Get out of the trade in the profit that it's in right now, instead of it climbing back to where you entered the trade and now you're stuck, or it climbs back to a little bit above where you entered your trade and now you're stuck. You need to wait for the market to start moving again. And I know how it feels psychologically and emotionally being stuck in a trade. So let me know if all of that makes sense, ladies and gents.
Yeah, so what I'm going to do, I'm going to show what you're talking about right now. Now, I should have done it while you were talking, but I didn't want to jump off your screen. So while we were going through that, I was jumping into trades. So again, if you were watching the recording, you'll see that I was moving into Tradelocker. So this is Tradelocker. A lot of you have been using MetaTrader 5. It did take a couple days to get used to Tradelocker, so I would recommend that you go to Sage FX or Thor FX or one of these other brokers and get a free demo account on Tradelocker. So I got into 2 of these trades. Right now you see it's sort of like bouncing up and down. So what I did based off of the conversation that Javid was sharing, I jumped into this trade here at an entry price of 2174.33. So he had been talking, I was listening, so I wasn't able to open the trade exactly where he had talked about, but I did a small lot size of 0.5 on a $200,000 account. So my risk was maybe like $100. So it's not a big risk and not a really big reward. And if I didn't get the trade, I was okay with it. Then as he was showing what was happening, the market went back up to 2175. Now you see it kind of bumped into profit here, and it's small, right? But if I close this right now, I am going to see a very small profit of $4.50. So if you see here, try to bring this up a little bit. I don't know why it's like sometimes it doesn't let me grab the screen here. Oh, here it is. I want to move this up and it won't let me grab it. There it is. All right. Well, no. It's like my screen won't cooperate. I can't make this part
bigger. Can see it. We can see it.
All right. I think that should open it up. Okay. So now you see the trade right before, and it's not a matter of how much it was. None of that's not relevant. Now it's dropping down more. And then it comes down up. But I got out when Javid said, let's take that little scalp, because, you know, the market was kind of not really behaving the way it's hard to determine, right? Like, we don't know if it's going to just bounce back up and break that little ceiling, or if it's going to just keep dropping down. And because it's been erratic, safe might be the better way to go. Let's just take a little bit of scalping profits off the top. Now, the thing that's different with Tradelocker than MetaTrader 5 is the fees, right? So now it starts to become more real. So you see that there's actual fees in here. Like, this was really an $8 win, but my net P&L is $4.50. Or here was a $43 win, my net is 36. But just in the little conversations, this is all, these 3 little trades here are all based off of what was happening, based off of Javid's conversation. And this was this morning when I was doing it on my own and guessing. So, and then look, you can see this has kind of been sporadic. There's red, there's green, there's a little bit of everything. But I can tell you there's more wins than losses. And that is not because I have any idea If you left me without tools, without traders, without the live sessions, without TTT, without any of these tools, I would literally, I think I could guess wrong every time. I'm almost convinced that if I guess at what I think the market is going to do, that it's going to be wrong. So you could actually have a career watching my trades and just doing the opposite of what I guess at. And I think you would probably be successful. That is how bad I am at trading, which is why I got out of it over the years. I've tried it and got out. Then I went to bots because I'd rather maybe a bot, or I tried to do mirror trading where there was experts. I've tried all these different ways until finally I found this community where I said, you know what? Enough is enough. I don't want to depend on anybody else for my trades. I want to try to learn this stuff myself. And it's not that I want to maybe aspire to, do the graphs and all that stuff. I mean, I kind of would like to learn that stuff, but it's more about how do I have enough knowledge to where I can read these charts and make an estimated assumption of where I see the market going. So this is the scanners, this is the tap to trades, this is the experts, this is all of the tools that we have available to us at Akashx combined, which is what I'm using. And now, Javid, so you'll because you've been tracking my journey, right? I started on Tuesday night with the $200,000 contest. And I started off, all the stuff that I had been using to practice went out the window. I completely panicked. I was chasing trades. I wasn't using the scanner. I was afraid to put in big lot sizes, so I was putting small ones. It was like I forgot everything that I learned over the past couple of years, but really the past couple of weeks. And so my 200,000 went down to 199, then it went down to 198, and I started getting even more nervous because it felt real, even though it wasn't real money. I want to get through this competition so that I am in profits. And so I started to get nervous. And then finally, I reset my brain yesterday. And some of these guys have been in Vegas, and it's been a weird week, so there hasn't been as many trades. So I just went back to what I knew, which was the scanner, watching what the traders were doing, getting on as many lives as I could. And lo and behold, I climbed my way back up to, I was pretty close to being back to 200. I'm a little bit under now because I did take a couple of small losses this morning. So you can see I'm down a total of 0.12. So my $200,000 is now 199,758. So in order for me to pass through the first phase of this competition, I need to hit this target here, 20,241. And I would need to do it. I have 5 days or more. So it's not within 5 days. You have to do it for at least 5 days, meaning if I came in and hit all of that profit today, I still have one more day through this part of the journey, and then I would go to phase 2. So my strategy is I'm going to take my time a little bit. I've been practicing using Tradelocker. I'm feeling more confident using Tradelocker. And so I'll now start to be a little bit more aggressive with my strategies because, again, it feels more real now because now, even though it's not my money that I'm losing, I'm still in a demo account, there's now something at risk, right? Because it's like you pay for the competition, so you got a little bit of skin in the game. You want to succeed. Obviously, I hold myself accountable, so I'm showing you guys results, whether it's good, bad, or indifferent, and showing you that journey because I want you to see that regardless of your experience level, anybody could jump in and do the same exact thing that I'm doing. I have nothing special that actually, and I'm being very transparent with you, I am terrible at trading or guessing on my own. So if I did not have Javid or Brent or Maddie Pitts or Joel or any of these guys giving recommendations, or if I didn't have the scanners, then I would have zero idea of what would be a good strategy or what wouldn't be a good strategy, if that makes sense. So anybody can do this. If you can only do an hour a day, then it might take you a little bit longer, because I am putting time in. I'm not putting 24 hours a day in. I am probably putting 5, maybe 6, 7 hours a day in right now, because I believe in immersion. I want to consume as much of this as I can, because obviously I want to get through this competition so that I'm now trading with somebody else's money. And I want to be able to bring as many people with me as I go. And so I know people are watching that part of the journey. And I've always showed you, whether it's good, bad, or ugly, I'm going to show you my results so that you can either learn from my mistakes or you can learn from my successes. But either way, I'm willing to put myself out there so that you can see that this is something that anybody can do. So if you are looking at this and saying, I got more experience than Glenn, great. Then you should be able to do better than me. If you're saying, I don't have as much experience as me, then that's okay too, because you have access to the same things that I have access to, the same live sessions, the same training, the same tools. So there's no excuses, regardless of which side of the fence that you're on. And what I love about this program, as compared to anything that we've touched in the past. And unfortunately, there was another program that I wasn't involved in, but there are some people from our community that they were involved in it, and some at a heavy level that disappeared yesterday. And I don't wish that on anybody. I didn't go in on this one because I've made a line in the sand where I've said, no more. I cannot do this anymore. I cannot take part in these programs where I'm giving my money over to somebody else. And if I can't get answers on what the how the profits are being earned on the back end, proof that the trades or however they're making profit is real, and maybe some insight about who I'm doing business with. Obviously, if there's a relationship there, better. But if not, I want to at least know that they're not, on the FBI most wanted list. That would be great. Or they're career scammers. That would be nice too. So if I can't get those answers, I've created a line in the sand where I've said, no more. I'm not going to participate in that anymore. And I'm not going to lead people to these ripoffs. And so I did not participate in this one, just not because I didn't think it might look good, but I just couldn't get the answers. And unfortunately, another one, tragically did not make it. And it's like, I just don't know how many have to fail in order for people to get to a point where they say, okay, I give up. Like, here's the white flag. I can't do it anymore. I already did. And I created this line where I said, I now am forced to, because of having too much money tied up in other projects and the waiting game, I've now been put in a position where I am now not willing to participate at a very high level of risk. So how do I approach that now? And I feel like everything leads to things on purpose. Like, I feel like everything happens for a reason. And the result of the last, I would say, 12 to 24 months is now I am in a position where I'm saying, okay, even if I had $200,000 to put into a trading account, I don't want to risk that much money right now at this stage of the game. I need to be a little bit more conservative and pull money in. I need to get into profits, and I need to be working from that direction only. So how do you do it? Well, in this scenario, what am I put in? Akashx is $149. That's it. It's $149 a month. And I get access to Javid and Maddie and Brent and all of these traders and tools. And I get to now play in that sandbox for $149 a month. If you've been in this space, you'll know that that's just like basically giving it away. So that's what I have as far as skin in the game there. Then you have the contest, which right now you can actually get into a contest for half the price, but you're talking maybe a few hundred to $1,000, depending on what level you want to. I say contest, competition, what level you want to get into the competition. And what I'm doing is I'm starting off by practicing for free with a free demo account on MetaTrader 5. I'm learning how to use the tools. Then when I feel comfortable, I put a little bit more in. I get into a competition where now my account is being judged. And that's what's happening right now is my account is being judged. So it's not that it's profit that I can keep. It's more about now my account is being judged. And as I get through phase 1 and phase 2, which is 2 5-day phases, where I want to see a 20,000 profit, and then I'm going to want to see a $16,000 profit. So 36,000 total over 2 days on a $200,000 demo account. Now, once I get through that, now they hand me the keys to a brand new, shiny $200,000 fully funded trading account. This is not magical. This is not mystical. There is no gotcha. It's not going to be easy. I can tell you that if you think they're just going to hand over $200,000 accounts to people that don't know what they're doing, that's ridiculous. You're going to have to show that you can manage an account without making too many poor decisions or making too many risky decisions. And if you can show that and prove that, whether it takes you 10 days, or maybe it'll take you a month, or maybe longer. I've heard some people say it took me 2 months to qualify my account. But then once you do, now you get to keep 80 to 90% of the profits that you earn on a daily basis. So yesterday, as an example, my trades were all small. Like Javid was saying, I was in and out, scalping, little profits, 50 bucks, 100 bucks. I can show you I think I had one trade that was like 600. Everything else was very small. But I accumulated about $2,000. I started at like 198 and some change. I got up to about 200,000. So even though I was only getting back to my 200,000 watermark, just isolate the day was about $2,000. Had I been on the 80% journey, not the 90% journey, because you can do 90%, but let's just say it was 80%, I would have earned $1,600 yesterday. Now, yes, technically I would be just getting back up to 200. So no, I wouldn't have, but I'm just saying, let's pretend that my account was qualified and let's pretend I was at the 200,000 mark or above. I now would earn 80% or be able to keep 80% of what I earn on a daily basis, which means you can go out and hunt for the day and you could put profit in your bank account for the day. Every day I can take out a withdrawal once I am now in a qualified account, once I am now in profit. Now, as a disclaimer, there is an 8-day waiting period, an 8-day holding period. So when you're done qualifying the account after the 10 days, it's 8 days before you can take your first withdrawal. So what they're doing is, which I think is brilliant, because I always try to put myself on both sides. I want to know, how are they doing this? Like, this doesn't make sense. Why are they just giving people a $200,000 account or a $100,000 account? But it actually does make sense. Here's why. When you're going through the contest, it's on a demo, right? So there's no risk. They're not risking anything. They're not letting you trade with real money. Once you pass the competition, you've now shown, hey, I can manage account without going too far into the drawdown, and I can hit this profit. So now they give you an account that's funded. Well, the rules stay the same. I don't have to hit 1% or 2% a day, but I can't go more than 5% into the drawdown on one day or more than 10% total on the account, or I'll lose the account. It just shuts off. So meaning, even if I'm in a trade and you see it go into red with a little minus, and then it goes too far into red, which 5% on a $200,000 account would be $10,000. So I have some buffer room, but if I was too aggressive, even if the trade came back with profit, I would lose the account because I was too aggressive on the trade. While I was in the trade, it went below the watermark and I would be out. So you have to be smarter with the trades that you get into, and you have to have a strategy there. Assuming that you can do that now in a qualified account, they still make you wait another 8 days. So that would be 8 days of, let's say, 1% a day, because I'm not going to stop trading. So, right, so 2,000 a day, maybe I build up. So now I'm at like 215 to 220. And I still now have a 5% buffer, meaning as I get into day 9 and I'm now in profit, if I lose $10,000, right now I lose access to the account, but they're still above the $200,000 watermark, which means that they don't have any risk. Brilliant model for those that have the money to be able to do this, because they're making money on people participating with the contest. Not everybody passes. I think you have a much better chance to pass using the TradeX tools and using the strategies that you can glean from these sessions. But a lot of people aren't going to pass, especially if they don't have these tools. So all of that is profit for them. And they're only staying in profit. So even though they're only keeping 10 or 20% of the profits as you go, they are retaining all of the profits from there on out. So for them, it's all gravy. There's really zero risk. For us, it's also very low risk, because this is more about rolling up your sleeves, using your brain, and creating. We talked about this on my Wednesday call. We used the word alchemy, right? Where you're taking multiple ingredients and you're creating something out of nothing. I'm not putting $200,000 up. Now, you could open up a trading account under your own name, use the same software, use the same tools, and you don't have to do the competition. Some people will do that. But if you want to really use alchemy and you want to really lower your risk, then the strategy would be practice on a demo account, then get into a competition. Then once you're trading, now you're trading using other people's money. So each day that you are in profit, it's 100% profit, because you don't have to get back the 200,000 that you put up. You aren't risking the 200,000. It's somebody else's money. So you are now in profit right from the beginning. Now that is really lowering your risk, because now you aren't the one who is putting up a large, substantial amount of money. Your risk was $149 to be in Akashx. Your risk was maybe $500 or $1,000 to join a competition, or maybe $3,000 if you did it a few times, right? Let's say it took you 6 months. People go into real estate and they'll go 6 months before they make their first house sale, right? Why is it such a stretch to say, I'm going to learn a new skill and I'm going to use all of these tools, and I'm essentially going to find a way to create something out of nothing, which is what we're doing here. Doing it part-time, doing it full-time, doing it some of the time, doing it all the time. You have the choice of how much time you want to put in, but just know that if you only do a little bit, you might not get the results fast, but you'll still get the results, maybe just over time. If you want faster results, it's just more time, right? It's just immersing yourself in to get faster results in a quicker period of time. So this is where we're at right now so far for the challenge. I'm basically back up to the 200. I have to get now through the first phase, setting goals. I'm really just breaking this down now into days. Whereas today, I would like to see a 1 to 2% increase, which would be $2,000 to $4,000 in trades. That's what I would like to see over the course of the day. I'm not going to look at the 20 or the 36. I'm going to break it down into bite-sized pieces. And that's the other thing, too, about trading that people need to understand. You can't force it, right? Like, I knew yesterday I didn't want to go big because the market's been like so crazy and up and down. So I didn't want to force it. I tried to take little scalps here and there, and I did piece together a nice little day over the course of the day. But it was a lot of time that I put in. You don't want to force it. If you do something small each day, it's the average, right? Like if maybe one day I have a 4% or a 5% profit, and the other days I only had a 0.25 or a 0.5%, it's the blended rate. Like over the course of the month, if I said I was able to do 18% in profits over the course of 1 month, think about what you know. 18% that's a big deal. Well, that's the competition, 10% and 8%. I need to do 18%. They're giving me at least 10 days, but I could take a month. So over the next month, can I do 18%? I believe that I can, using the tools that are provided by Akashx. Now, once I get through the competition, now I'm in profits. Now, every day when I come in to work, I can now go hunt and feed my family based off of what I do that day. If I go out and I hunt $1,000, I can take out $800 the next day. If I hunt $4,000, then I can take out $3,200 the next day. 80% or 90%, if you upgrade, is what I have access to the following day. We're paid in crypto. If you don't know enough about crypto, we can show you how that works. You would just take that and convert it over to US dollars, put it into your bank account. Or if you want to learn a little bit about crypto, we can show you ways to take that crypto and use it to pay bills or put it on a prepaid Visa card, or maybe there's a lot of different things you could potentially do. Or you could take some of those profits that you're earning off of managing somebody else's account and put it into your own brokerage account under your own name. And now you have two accounts, use the same tools that got you here, and now you're managing both accounts. And that's the 1,000 to 1 million blueprint in 1 year that I've been talking about, which is essentially taking half of my profits and using them to pay bills, which I think is realistic for most people, that they would need to do that. And then take half and put it into your own brokerage account under your own name. So now you're getting paid as you go, which under that blueprint, you would earn about $200,000 in your first year in profits that you could pay bills with, which should be enough to cover most people. And at the same time, you're taking the other half of your profits and you're putting them into a brokerage account and growing that at 1% a day. And if you continue to do that and compound that out over a year, you'll be at approximately $1 million using that strategy. All right, so let's see where we're at. There's a lot in the chat. Let's just check the chat here before we go. I think Javid might have bounced. He was on here for a short period of time this morning. These guys, I'm going to chat with them about moving forward. I got them to agree to Monday and Friday for the last couple weeks. And then at the conclusion of those 2 weeks, we said we'll evaluate it. We'll see how the community responds. Are people liking this strategy? And if so, then maybe we'll do the same thing moving forward. If not, obviously we'll make an adjustment. So I'll get with them and I'll find out how we're going to proceed next week. What determines the size lot you use? Lot means how much money. Let me come back to that question, Mark. Let me just check some of these other questions here. Great point. You will have to take time regardless. That's from the consultant, and I think he was agreeing with my the timing. You know, the analogy of being in real estate. I don't know if that's what you're agreeing to, but one way or another, it's going to take time, right? Like anything where this is what I think has been kind of coming into my consciousness more so now recently, more than ever, is anything that it's like too good to be true. It usually is, even though we don't want to admit it, it usually is. And there's nothing too good to be true here. Once you get in, you'll see that it's not as easy as you think. The tools aren't always going to work perfectly. The traders aren't always going to make perfect trades. Like you're going to have to learn a little bit. But at what point is enough to where we say, all right, I'm going to stop giving my money over to a third party, unless, again, you can prove where the profits are being made. If you can prove who the people are. Like, I'm not saying don't do that, but just understand the risk, right? And if we're giving all of our funds over to those third parties, then we do lose control. And we can't be mad when things don't work out, because just like if you were trading, there's risk, right? There's risk in everything. So our risk goes up when we give our money over to somebody else. In this case, nobody's giving up money to anybody else. We're actually using other people's money. So we are lowering our risk, but we're having to use our brains and our sweat equity to actually make the profits. Standard risk, 1 lot per 100,000 account size, then scale. 10,000, 0.1 lot size. Yeah, so, and that's from Crypto Pays Me Daily. So I'm going to go back over to here and I'll show you what that kind of looks like, right? So so this is Tradelocker. So for you guys who haven't seen Tradelocker, this is what Tradelocker looks like. I don't have any open positions right now. So here is my chart, which I can make bigger or smaller, but right now I kind of have it small. And you can see it did pop over that 2175 mark. It went all the way up to 2178, but it's still kind of above that mark here, right? So we'll keep our eye on that based off of what Javid was talking about. So this was that 21. So you see here, right? This is that area here, and it did pop that ceiling. So we'll kind of keep our eyes on it. But let's say I was going to open up a trade. You see over here, it says sell or buy. And I'm going to open this window up. So you see now that window is open. And I can close it or open it. So you guys should see here, now it's open. I'm in gold, XAU, USD. And the choices here are either sell or buy, right? So this is sell. If I feel like the market is going to go down, then I'm going to sell. If I feel like the market is going to go up, then I'm going to buy, right? That's basically sell or buy. Stop loss. And so what'll happen, what I do like about Tradelocker is when I click on stop loss, you see it's this little thing came up on the chart. I can move this around and it'll adjust. So let's say I was going to do a sell. If I was going to sell, then I'm saying that the stop loss should be above where I'm at, because if I'm going to sell, I'm essentially putting in a trade saying that the market is going to go this way, go down. And so if the market goes up, then at a certain point, I want to get out of that trade. Even though it sucks to hit your stop loss, it's a lot better to hit your stop loss than to get into one of these deals where it just keeps going and going and going, and it could potentially blow your account. So that's risk management. You definitely want to put in a stop loss. Take profit, same thing. You see it's in green, right? So the market is here. Let's say if I was going to put in a take profit, let's say if it was going to be a sell, I might say here or here if it's a small one. And now it's adjusting the price, right? So if I move this down, it's adjusting that price. So you can see the ticks are moving, and then here's my P&L. Here's what would happen based off of this lot size. This is a $200,000 account. So what Quentin, Crypto Pays Me Daily, just said is 1 lot size for 100,000, right? So since this is 200,000, I might say 2. That would be based off of now kind of the same idea. 1 for 100, so you would just say 2 for 200,000. So what am I essentially going in on that trade with, right? If I hit the stop loss, I would lose 418. If I get the trade and it hits my take profit, I would get 732. Now, market's up a little bit more, I might raise the stop loss and maybe kind of get it more so it's like in the middle here, or you can manually put these numbers in. So when they say stop loss or take profit, all I do is I'm just manually putting the numbers in if I wanted to, just follow along with their trade recommendations. And then this is just essentially showing me what my risk level is for that trade. Now, another strategy you could use is you could say, I'm going to go in small, right? Very small, low amount of risk. I'm not sure where the market's going to go, so I don't want to have a tremendous amount of risk, right? What I've seen a lot of people do is go the other way, where they are going heavy. Let's say 10 lot size on a $100,000 demo account or a $200,000 demo account. And that's great when you win. That's great, right? There's nothing wrong with that strategy if you win. The problem is that if the market goes against your strategy and you're in a big lot size, then what happens is it's not only that maybe you'll hit your stop loss and actually lose several $1,000s all in one fell swoop, but you are running the risk of now being too much into the drawdown while the trade is open. So that's the stuff that you have to consider, is not where you would win if the trade profits, but where you would be if the trade hits the stop loss, or can you buffer? Is there enough room in your account to warrant that? Like this, I now know if I did decide to use this stop loss, 3,800, I have 10,000 worth of buffer. I could do that. But if I lose 4,000, now I have to claw my way back up for 4,000. So you want to be looking at both sides of the equation, not just what it would be if you win the trade, but also what it would be or mean if you lose the trade. So you just want to be careful. These are all things that you have to learn and consider. The other thing you could do is you just take the tap to trades, or you just take the recommendations that they give you on the trade alerts, which is fine. There's nothing wrong with doing it that way. But I think you should know a little bit more and just get a little bit more comfortable with what it would look like putting it in for yourself, so that you start to be able to, take an alert, or you could actually look at the scanner and make your own determination. So that's essentially what it would look like if I put this trade in. If you come over here to closed positions, you can see I've been active over the past few days in this competition. I've been practicing and practicing and practicing. You can see when I first started out, I was not so good at the practicing part, even though I was starting off with very small lot sizes and just kind of testing it all out. I was sort of forgetting some of the fundamentals. You can see here was a 1 lot size, but that was on Bitcoin. And again, you kind of want to know what I was just really practicing. So you just want to know what you're going in on and what you're risking. And so I just went through a few days worth of practice. Now I feel like I'm in the game and I'm ready to roll. So we'll see how I do over the next week or so. And hopefully I can get through this first phase and then move on to the second phase, which would be 8%, which means that you're on a tighter drawdown also. So that's the lot size. And really, it's not whether or not one's right or wrong. Your best bet is to just play with it. Like when I first got in here, I was doing like 0.2 lot size, right? Like you can see that it's a much smaller risk, right? So let's say it would be about here, right? It's about $37. But it's just kind of, if I lose it, it's not that big of a deal. I lost $30. So it's getting used to it before you get more real with it. All right, let's see on Q&A. How do you get the candle screen you are showing? So this is just Tradelocker. So like I said, with Tradelocker, you can open up a free demo account on Sage FX or Thor FX. You have to use your identity, do a KYC, but they do have free Tradelocker demo accounts. And you can start to play with Tradelocker. But once you get approved through the broker, that's what Sage FX or Thor FX, they're brokers. Once you get an approved account, again, you can use your demo. They'll give you your login credentials. you would log into Tradelocker, and then you would be essentially seeing the same software that I'm seeing here. You're just this is the main screen here, but let me just see. It's kind of messed up because it's hard. Yeah, I know you guys can't see it, but I got everybody's picture in my view here, so I can't see why I can't grab the top of the screen here. But if you can see it, like I'm at the top here. So if I wanted to, let's say, change it over to Bitcoin, see, I can't see, so I can't really change it. I don't know why. I'd have to like figure out why. This is. Let me stop the share here for a second. Yeah, I'm not going to mess with it. I don't know. I'd have to probably refresh my screen or whatever. But anyway, it doesn't matter. I'm in the gold right now, XAUUSD.pro. I'm in a 5-minute candle, so I can change that over to like Javid had 15 minutes, right? I'm on 5 minutes. And you can see now the market dropped back down. So like he was saying, now it's hit that 2175 mark here. Let's get this light out of here. Get that out of there. So you can see, based on what he was talking about, this was where we were at right here. So I think based off of the conversation he just had, I would want to see what it's going to go do. Is it going to continue to drop? Or is it going to now create a new floor here? And it's interesting listening to his advice about, why wouldn't you want to jump in here if you think it's going to keep going down? And his advice is, no, just let it go. Traders always talk about the market is setting up. And so, it looks like we're kind of in a wait and see here. And then if you go over to the scanners, right? So this is the gold scanner right here. I personally like Pulse. I think it's been a really good scanner. You can see, look, check it out. So Pulse at 2179 said sell 5 points. So that means that 5 different trading indicators all say that this is a perfect time to sell. And so that was at 2179.53. And that would have been right about here. And you can see what happened to the market after that scanner. So that was how I got used to reading the scanners, is instead of me using them, I would just kind of watch them. When, like right now, it's kind of faded, where it's like a pink, right? So it's not like it's saying get in here. The entry point would have been here. Now it's here. You don't see it saying sell here. Actually, it's the opposite. You see 2 indicators that just showed up green. Now, I don't have a buy yet, but I got 2 indicators that show green. So now if you come back over here, look what's happening, right? It looks like it hit all the way down here and then it bounced back up. So now it's in profit. So now I don't know that I would have gotten in if you're just following the scanner and you're not using, let's say a recommendation from TTT or a trade alert. I've learned that it's probably best, in my personal opinion, to try to be patient and wait for a clear signal. Because usually when there's a clear signal, like here there was a buy, boom, look at that. Now it went up. Now there were some sells and it didn't quite sell. Then it dropped and then boom, 5 points, it dropped. Now it's down and you can see it's starting to maybe come back. What 2 indications are saying is that it's going to come back, but I don't have a clear buy in here yet. So I probably would just either wait if I'm not hearing from the traders. So it's like, is there a trader making an alert from Telegram, or, in Akashx, is there a TTT? If that's not happening, what's the scanner saying? If I can't get a clear read on those things, then I'll probably just kind of wait it out and see, where it goes, and watch the market and kind of get a determination there. So see if we would have went in on a buy. Look at what's happening. The market is going up. So look at that, right? I mean, you're seeing the same information that I have. Now, it wasn't a clear buy. Even though I had 2 dark green arrows, I didn't have a buy coming in here. So I didn't jump in on this, but look at what happened. Boom, it went all the way up. It's still going up. 2176 from 2174. That could have been a nice little profit that somebody would have made if they would have jumped in and then potentially jumped out. And that's the other thing that you can do here on these trades is, if you get into profit and you feel comfortable with the profit you're in, you could always take the profit and get out. Jumped in manually, made 102. See, perfect. TTT closed out, earning 30 pips up. Awesome. I missed that. I guess that was when we were on the call. That's great. Ryan, actually, I don't know. Just going to go through here. Questions.
Hey, Glenn.
Yes, sir.
Have you? We just got another trade alert notice for the NAS 100, and they have entry points, stop loss, and all these TP1s. Are you ever going to maybe kind of explain us how we use that to our, where do you go from there, basically?
Yeah. So,
or do you stay out of that?
Yeah. So I have, if Brent or one of the traders are on, if they want to get into NAS 100 or they want to get into one of the other currencies, that's okay. For me, I've actually went back and watched one of the recordings, and I was a little all over the place with currencies, and I've decided to try to isolate that conversation so that we're keeping it simple for these calls. Now, I'm not saying we won't do other calls where we just get on and we're doing trades and maybe we're jumping around a little bit, but I have some people that are kind of just hearing this information for the first time, some that have some experience, and so it's a mixed bag, and I just want to be a little bit more careful with how complex that I get. So I'm going to stay away right now from the NAS 100 and just really try to focus in on gold here. All right, so that's not what I wanted to do. Just chat. Which platform are you referring to? Yeah, unfortunately, Tower fell apart. Was the one I was referring to, which again, I don't wish that on anybody. I know what it feels like. It's devastating. It's very difficult when you're in something to see the flags. It's a little easier to see the flags when you're not in it. And that's one of the other lessons that I've learned this past year is I am asking way more questions before I even get started, because sometimes once you get started, now you're in it and you're in the Kool-Aid, right? Like you're in it. And then maybe you see a flag, but you justify it because you don't want to see it. Whereas on the outside looking in, the flags were kind of clear for me. And I'm not saying it's nothing against anybody who got involved in that, but I could see the flags much clearer. Ken and I, we've talked about this, the consultant, where I was asking very specific questions about, I wanted to see their books, not their books on like how they make profit as a company, but I wanted to see how they could prove that the profits that they were claiming to give us that were real because they were using fancy words like, algorithms and quantum computers and AI. And, they would answer my questions with, basically making me feel like there's nothing that they can show me that would be able to prove that the trades are real. If I'm that skeptical, maybe this isn't for me. Well, actually, there are things that you can show me. And if you've been on any Zoom with somebody who is actually doing real trades, they're more than happy to open up their screen and show you their trades. They know that you can't steal their algorithm. It's ridiculous for you to even try. And so they're more than happy to show you their results because they're real. So you can tell whether or not somebody is real. So when somebody tells me there's nothing that they can show me that would prove that it's real, that's a flag because they're not even trying. And then the second thing I asked is, can I find out more information about who runs the company, the CEO? Can I get on a Zoom? Can I ask some questions? And I was told I wouldn't be able to get on the phone with Jeff Bezos if I was, trying to invest in Amazon, or I wouldn't get on the phone with Bill Gates if it was Microsoft or Warren Buffett or whatever, for various companies, Sam Walton for Walmart. And, my reaction to that is, yeah, that's fine. I understand that. But those are publicly traded companies with people that I don't have to do background checks on because it's very clear who they are. I know them and they have a public profile. They're not somebody who's not telling me their name. I know what their name is. And these are public companies that are licensed and regulated. This is an unlicensed, unregulated company in a different country. And the fact that you won't tell me the name of the person that is behind it then tells me that you're hiding something or that they're hiding something if they want to stay anonymous. And that's fine. It's not my business. But if you're asking me to put up my money or the money of people in my community without being able to have a conversation with the people that are running the company, then I just can't do that. I've made a line in the sand and I just won't do that anymore. So it's not that I expect you to get on and maybe do a 3-hour Zoom with me, but I do want to talk to you. I want to ask you some questions. We just looked at another company last month and I loved it. I think what they're doing, it could be great. And the CEO wouldn't tell us his last name. And I didn't move forward with it because, again, I've made rules. I'm sticking to those rules. And if I get on a Zoom with somebody and they won't tell me their last name, and they can tell me all the reasons why, this person did this, and so there was all this negative spotlight on me, and I don't want my family to be, put in that position. And, but if you're not planning on ever doing anything wrong, then why would your family be in a negative position? Why would you be worried about people knowing who you are and who your family is? There's obviously something wrong if somebody won't tell you their last name. And if I can't do a little bit of research to just cross-reference your name on the FBI most wanted list or Interpol's most wanted list, then I don't know that I should be giving you significantly large sums of money or telling people in my community to give you large sums of money. We only have to listen. If you guys want to keep learning this lesson over and over again, then you're right. This isn't the place for you. This is work. Like, it's different. It's work. You're going to have to do a little bit. And I understand that some people have said to me, this is too complicated, or that's fine, right? Like, you want to keep putting your money into these things. I've gotten to a point now where, number one, I can't afford these significant losses anymore. There's only so many you can afford to lose before you get to a point where you say, this is causing too much damage and I'm not seeing a positive result in comparison to the amount of money that I'm putting in. And two, I want more control. And yes, in trading, I don't have control, right? Like, I can't control the market, but I can control how much risk I put up. I can control where the money that's in it. Let's say I put money in a brokerage account that's under my name. If I needed to pull it out to pay some bills, I could pull it out to pay some bills. There's no excuse. There's no story. There's no, I gotcha. There's nothing. You're in a licensed, regulated broker if you pick the right one. You're with a real broker, and it's like having money in a bank account. It's just going to be tied to the software. So now when you're making trades, you're trading off your own money. Is there still risk? Yes, which is why you want to use the tools. You want to get good at using the tools. But so there's no way to eliminate risk. If you're looking to eliminate risk, don't invest, because there's no investment that I've seen that has zero risk. But I had to at least eliminate or isolate the option or the ability for somebody to lie, steal, or scam me. And with Akashx, there's no possible way to get lied to or stolen from or scammed, because I'm not putting money in Akashx. I'm buying or paying for $149 a month to be a part of the community. I'm paying a little bit of money to get into one of the competitions, knowing that I could fail and lose that little bit of money also. But I'm hoping that I can use the tools that Akashx provides for me, and I can pass the competition. And now I'm trading using somebody else's funds, right? So what would be my exposure there? That I go through the competition, I get approved. Now I have my own trading account that's fully funded. And then I go to make trades, and they won't allow me to take the 80% or the 90% profits out. Okay, let's just say that hypothetical situation happened. What was I out? The 149 for Akashx, and I was out the little bit of money I put up for the competition and some time. So either way, we're going to have to put time in, because all the deals that I've ever lost money in, I put a significant amount of time into. I learned them. I did training. I was on Zooms. So there wasn't anything that I did that I didn't put a lot of time into. So one way or another, I put time in. But if I lose $50,000, or if I lose $100,000 or $200,000, right now, that's a real loss. That is real money that I cannot get back. I could try to hire attorneys. I could try to do things to get that money back somehow. It's very unlikely that I'll be able to ever see that money again. And for some of you, like myself, there's hundreds of thousands of dollars worth of stories that we can share with you that have gotten us to this point now where we've said, no, I'm not going to do that anymore. And if you're not going to do that anymore, then you really can't do it anymore. You can't say, I'm not going to do it anymore. And then when somebody comes to you with the next shiny object and says, we can make 8% a day and there's zero risk because they're willing to give you your money back tomorrow. There's literally no commitment. You can stake for 60 days, but they'll give you your money back tomorrow if you decide you want out. That was the new pitch, and I've heard it now from multiple companies. That's the value of looking at multiple things. I'm hearing the same pitch, but I'm hearing it from multiple different companies. You put your money in, so it's a stake. They're going to trade using their algorithm, new AI, new quantum computers, new thing that's nobody else has seen. It's proprietary, and you wouldn't even understand it if I showed you, because it's the most brilliant thing ever, and it's going to get you 8% a day. But you put up $100,000. If you don't like the results or you don't like what you see, you take the $100,000 back out tomorrow. Well, that all sounds great. And maybe some people were able to take out their $100,000 until you can't. And then the day you can't, you can't. And the day you can't, nobody else can. And as soon as you realize it's a rug pull, there is nothing you can do. And all you can sit back and watch is, now next thing you know, the Telegram community is going to be a shitstorm. Everybody's going to be freaking out. Your phone is going to be ringing off the hook. You're going to have to hear and face and listen to all these stories of people that lost their savings, including yourself, most likely. You're going to have to face all of those realities. And I can tell you firsthand, it's extremely painful. And I've been through it multiple times. And at a certain point, you have to say, enough is enough. I can't allow that to happen anymore. And if I'm not going to allow that to happen, how did it happen in the first place? And how do I prevent it from happening again? And so you don't want to put the work in, don't, right? You don't like this, that's fine. But I can tell you that regardless, there is very little, if almost no risk in being a part of this from a perspective of us losing or getting ripped off. That part I can say 100%. Even if the competition didn't pay us, what did we really risk? We didn't put up the 200,000. We put up a little bit of money to get in there. And if they didn't pay us, then they're gone anyway. So it doesn't even make sense that they wouldn't pay us. But that's our risk. Our risk and our exposure is very, very low and very, very minimal. And so, if again, I've said it, if you're looking for one of those high risk deals, I'm not saying I won't ever participate in anything like that again, but it won't be, there'll be certain rules that I have to abide by from this point moving forward. And I probably would be reluctant to go in heavy ever again, which then makes it really hard, because even if you're making 8% a day, if you're only willing to risk a little bit of money, 8% a day is not that much. Whereas here, I can risk a little bit, but my upside potential is massive. You can make this into a part-time gig. You can make this into a career, but it's going to take a little bit of time, effort, and energy on your part to be able to do so. So let's see what happened while we were talking. Let's see, the market dropped down 2172, and now it's back up to that 2175-ish area here. Probably has a little bit more to go, maybe. We'll see. All right, let's go check the chat here. Enter a trade and trade. All right, I think just going through some of the questions. We're at 10:30. We started at 8:30, so that's about it for today. I will reach out to you all in regards to next week and the strategy. I do want to do more training on the scanners. I want to show that ladder technique because that's been working really, really well. But it has to be under the right circumstances. Let's just see here. Does anybody want to? Let's see. There's a buy-in right now. A buy-in for gold. Where was that buy? Where did that buy come in at? Buy gold at 2172. Let's see here. Let's see where it's at. 21. It's already up. See how fast that goes? So that buy came in here. See, that's what I'm saying. If you really get used to these scanners, this buy came in at 2172.95, and it went up to 2174.80. So now it's coming back down. But even if you took the profit from here to here, you could have had a nice little profit based off of just the scanner. And see, now it faded. And so that kind of tells me that buy recommendation is now off the table. So this is what I mean when I say you have to be paying attention in order to be able to take advantage of it. And then look, it dropped all the way back down to here. All right. Any other questions before we end today's session? Does everybody know how the competition works at this point? Does everybody understand the difference between Tradelocker and MetaTrader 5? I'm not saying you guys have used that, but you guys understand that Tradelocker is what you would use in the competition. So that's why I'm recommending to get one of the demo accounts if you're not ready to do the competition. Now, what I would say, if you want to do the competition, then I'll send you my link to do the competition. And then there's a code that you can get half off right now until the end of March. So the pricing would be half of whatever your, whatever add-ons and whatever pricing, it would be about half off, I think. I'm not sure if the add-ons, I don't remember if the add-ons were half off, but if you want to jump into that now, and then, start getting used to Tradelocker, maybe start with some smaller trades just to get used to it. You could do that, or you could just wait on the competition and don't do it now and don't worry about saving the money. You can always, it's not a bad deal anyway, and then come back in later and do that, but use Sage FX, Thor FX, which then you can get a free demo account with Tradelocker on one of those brokers. You guys can come off mute. I muted Jim there while we were, just because I was talking and I heard some background noise here.
Right, and so you said there's a referral for the Tradelocker that we can practice with and still stay hooked up with Akashx and all, like keep it separate.
So if you want to use Tradelocker, you could go to Sage FX.
Sage FX.
Yeah, that's one of them. Here, I posted it on Crawford Coaching, but let me.
Okay, it's on our site.
Yeah, if you go to sagefx.io, I think it's .io. Let's see.
When the contest starts, do you have to complete it in 2 weeks? Or you have
No.
longer?
No. It's that's the minimum time. Okay, so it's sagefx.com. And then you would just go through the sign up and then see here, Tradelocker beta. Sage FX, Thor FX. Those are two that I know, Thor and Sage FX.com. And you can go open up a free account. You'll have to do your KYC, like your driver's license and all that. And then you can get the demo account of Tradelocker, like I have it, and then you can start practicing. And then what I recommend is use MetaTrader 5 alongside of Tradelocker. Like maybe use both of them until you get used to Tradelocker. Then you'll probably migrate over to Tradelocker. Once you're used to Tradelocker, because it is different, fees, like it's just different. The way it looks, it's just, you got to get used to it. Then once you're comfortable there, then maybe at that point do the competition. And to answer Jim's, I think that was Jim. It's 10 days total, so it's 5 days phase 1 and 5 days phase 2, but that's the minimum. So if it takes you longer, like right now I'm on day 4, day 5 comes, if I didn't hit my 20,000, it's not like I'm out. I can take as much time as I need to get there. I don't think there's a time limit on there. Maybe there is. I'll have to check. But I mean, I know it can take a month or two, and just, if I wanted to do a little bit each day, or if there's certain days I couldn't do it, there's no emergency saying I have to do everything that day.
It makes sense 5 days minimum, because you get lucky one day and do a great trade and then you're done and you really don't know what you're doing. You just got lucky.
Yeah.